Officially, good day, guys. Another free Saturday session. So today we're going to be talking about continuations as what you guys have chosen to talk about today. You guys want to talk about continuations. So we're going to look at how continuation works. So basically, in the entire market, there's what we call logic over pattern, right? If you notice, everybody in the industry treat the same thing, and every profitable trader treat the same logic. For example, everybody is looking for this pattern. Everybody is looking for this pattern. I mean, everybody. Yes, whether you are trading support and resistance, anything you are trading, at the end of the day, all of us are looking forward this pattern here to trade. But then, while some people are different, is everybody has a different logic to trade this pattern. Everybody has a different approach to trade this pattern. Why? Because this pattern exists everywhere. This pattern is everywhere on the chart, right? So now, this pattern now is called um some people call it the algo structure. Some people call it the advanced market structure. Everybody call it different names, but this pattern is what everybody is usually after because it is a proven system that has worked consistently over time. So it is technically okay for anybody who is interested to be interested in this pattern. But you see a lot of people still knowing this pattern but failing. That's because they have no logic or their logic is not apparently working well behind the pattern. While some other people just jump into the chart without a logic and start hunting for this in the 5 minutes or the 15 minutes time frame. Anyway, they see it, they set limit order, right? Which is very wrong. If you pay attention to most people trading this, there's always something that is governing this particular thing. Another thing is there is always what there is nothing like pure continuation. There have to be an origin before a continuation. So now, before I jump into the topic today, which is continuation, I would like to talk about origin a little bit, right? We all traders have believed that, okay, with time, what we're doing is we're trading something that repeats itself. And we have systems that have proven themselves to like repeat themselves consistently and have a good win rate to work with. Now, this is one. Now, for the market to continue, there need to be origin before we have a continuation. The market cannot just continue. A tree cannot start growing from stem. There need to be a root, right? A tree cannot just grow from stem or from branches or leaves. There have to be a root. So for a continuation to happen, there need to be an origin. Now, what brought about the topic origin and continuations? Now you have to listen to this. Now let's say a storyline just started. When a storyline starts like this is a daily key level right here, right? When we have a daily key level, we have a 4-hour structure like this. When the 4-hour structure approaches the market like this, hits and break. So when we have the break on the H4 time frame like this, then on the H1 time frame, what we are expecting is an origin move, meaning the origin of the sell is about to start. And then we have three basic structures that we are usually interested in. Now, the three structures we are interested in is, now, this is the daily killer. Let's say this is an OCL. Then there's what? H4. And this is usually going to be what? On the what? H1. Quite all right. We all believe. Now, the three structures we're interested in, I'm going to draw for sell, then you're going to be interested in the one for buy. You can reciprocate it for buy, right? Yeah, inverse, that's reciprocate. All right, so for sell, we're interested in basically three structures. Structure number one is this, like this, and then we sell from the QM or the apex, anyone depending on where your rules, which one is the point of interest, right? Something like this. Then the second one is the same thing, but the breakout structure is quite different, meaning the market give us a minor break before the major break, then market pull back and then sell, which is the same thing right here, and sell from here or from what the QM here, the same thing. Then the final structure is the one usually SMC traders pay attention to it as a breakout block structure, which is cool, right? Anyhow you call it, structure is structure. So these are primarily the three type of structures we're interested in, right? And each of these structure have fulfilled the 5 trading rules I use for entry. So anytime you have these structures, they must have fulfilled all the rules you want to use for entry. Now, this structure type 1, this is structure type 2, and this is structure type 3. Now, structure type 1 and type 2 are basically called origin structures. Do you know why? Because anytime a storyline starts, that is usually where you find structure type 1 and type 2. And anytime a storyline has already started and it wants to continue, that's where you usually find structure type 3, which is the breaker block structure. So that is why structure type 1 and 2 are called origin structures. They are usually in a place where the storyline just started. Then continuation structure occur after the storyline has already started and the market is about to continue. So these two are origin structures and this is a continuation structure. But an origin structure doesn't mean it doesn't happen in a continuation phase. And also a continuation structure doesn't mean it doesn't happen at what? An origin phase. No, anyone can occur anywhere. It is just the name. But why is continuation setup called a continuation structure? Because even if we are in a bearish storyline on the daily and we have an obvious H4 continuation structure to the upside, it can disrupt the entire storyline. I've seen it happen countless of times. So this is what a continuation structure. Our topic is continuations, not a continuation structure, but a continuation structure should be the origin of me discussing continuations. And I'm going to be very frank discussing continuation with you guys today. But you need to understand storyline, which I believe everybody must have known what a storyline is or must have learned storyline in one place or the other, right? You must have recorded it in one place or the other. You must have watched it somewhere. So this is structure type 1. Put it at the back of your mind, type 2 and type 3, because I'm going to clear it, right? This is the one for breaker block usually. This one is other blocks and QMs. Anyone you see there. The one they call it for us basically, we call them QM, support resistance, RBS, and blah, blah, blah. All of them are the same thing, right? So now, since you've understood origin structure and continuation structure, what do we do? Once a storyline starts, this is the daily level. This is a H4 hit and break. H1 usually will present this particular thing, and this is now an origin structure. While we have a QM, we have what? This particular thing. Now, how does continuation comes in? Let me see it. Since your storyline is on the daily and your normative break, why I call it normative is because I treat differently. What I mean is I can have a daily reject daily based on the doctor system, and I'm going to have a 1 hour breakout. I'm not going to pay attention to it for breakouts. Yes. So I can also have a daily reject daily, and I can have a daily breakout based on the doctor system, based on how I trade. But now, what I'm talking about is the normal way everybody trades is a daily reject daily and a 4 hour breakout. That's why when you see me say normative way, meaning you have a rejection on a time frame and you have a breakout one time frame below the time frame you have a rejection. So that's the normative, that's the normal way. So we have a daily reject daily and we have a H4 breakout. Then we will be expecting the structure after the breakout, the origin structure to happen here. But again, I will explain. It is very okay for us to have a continuation structure at the origin phase. This is the origin phase right here, but then we have a continuation structure first. Yes, it is very okay. But then now, what we are interested in talking about right here is what? Oh God, something is happening right here, guys. Right? What we are interested in talking about here is continuation. Now, how do you continue? I'll give you guys like 2 or 3 methods how you can take continuations, but I'll give you guys the most important information now, how I do it. If I am in a daily storyline, I'll be expecting all bearish. Since we're in a bearish daily storyline, so let me write it. Oh God, some people. Since we are in a, I would say, since we are in a bearish storyline. Now, we expect all or most H4 bearish levels. Oh God, oh God, oh God. Allow me to type now, brah. Key levels to hold. Now, you see the statement? This is the entire thing about continuations. This is the entire logic behind continuations. Since we are in a bearish storyline on the daily, so let me add on the daily, right? On a bearish storyline on the daily. Now, we were now going to be expecting all or most H4 bearish key levels to hold for sales. Your work now is to refine that H4 bearish key level into the structure I just deleted here, either structure type 1, type 2, type 3 on the lower time frame. That is how I take continuations. I'll say it again. Since you are in a daily bearish storyline, where did you look for your break? H4. That's your H4 break time frame. That time frame you saw your break. Now, those key levels on that H4, all bearish or most of the bearish, we are expecting them to hold for sell. Now, you want to refine that H4 bearish key level into what? H1, M30, and sometimes M15. And on the M15, what do you want to see? That structure that I deleted, type 1, type 2, or type 3. Now, this is the logic behind this structure. That is why in the beginning of the class, I said, there is a logic. Everybody you see trading this thing successfully, this thing is always everywhere on the chart. It is always everywhere. But what do you do? What you do is you need a logic for it to appear in a certain pricing level. Like my mentor used to say, at a particular pricing level, that is when it's going to be valid. It is not everywhere that it is valid. Some of the time there is no logic behind it, and if you wait, the market is going to hit SL right at that place. You get, right? So now I'll go into the chart and we'll see this. Now I will make an explanation before I go into the chart. If you are dealing with the weekly time frame, if this is a weekly key level, let me change it. Then this is going to be on the daily, right? D1. And this one is expected to be in the H4, H2, right? H4 or what? H2. Then this statement is going to change. It's going to be, since we are in a bearish storyline on the weekly, right? Let me write it so that because of some people are natural on this, sorry about that. We expect all or most of what? D1 bearish key levels to hold. Now, the explanation here is some are going to be ignored to go to some. What I mean is now we can have a bearish key level consecutively. Let's say we have 3 like this, and then between here is an OCL, between here is an OCL. And Doctor once said, since we are in a bearish storyline on the weekly, we expect all mostly or daily bearish levels to hold, and then the market will now come. You will now be expecting the market to use this for itself. Then market will now come disrespect this and come to this, and you'll be like, Doctor, how? How is because you need to be logical while choosing which key level the market is going to hold. That is why you need a structure on the lower time frame. What if this one is not giving any of those structures on the lower time frame? What if this one is not giving any of those structures on the lower time frame? The market is likely going to source the one that is above. And remember, I use 5 trading rules to enter the market. And each of these key level, when you are refining it on the lower time frame, must complete the criteria of what? Of my 5 trading rules. Right? So be very, very sensitive. Now, let's go into the chat and I'll give 1 or 2 examples and then we're done for the day. I'm not here to make too much noise. The topic is very simple and specific, nothing too much to talk about. So basically this week, I'll use the trades I took this week. I will pay attention. Now, this is gold and let's go into what? The daily time frame. First of all, we always want to establish a storyline first, right? We want to establish a storyline. Now, let's pay attention. What happened to gold right here? Did you see this? What do we have here? A daily rejected daily. This is a daily time frame. So I have a daily key level right here. So, I trade only gold. So basically, you see a lot of trades I talk about on gold. After the daily rejection, we all drop into the H4 time frame. Quite all right. Now, when we drop into the H4 time frame, we're going to be looking for what? A breakout. Now, on the H4 time frame, I think market came here and gave us what? A breakout, right there. So we have a H4 breakout. Now, market did not give anything origin, but then doctor said all H4 bearish key levels are supposed to be used for sales. Some people will start, I'll mark this, I'll mark this, I'll mark this, because this is where the market is. But again, at the same time, if you've ever attended any of my complete class, you notice that all these key levels, you are not interested in them. Why? Because market gave you another mini breakout here. So you are now going to be interested in the most recent price action here, meaning we don't expect the market to go beyond here as of that day. We'll be expecting the market to keep dropping until the next key level. Now, what happened? We have H4 key level, H4 key level. All these are H4 key levels, and we are expecting each or one of them to sponsor a sell. Now, look at what happened and look at where I took myself. I have this H4 key level right here, this OCL, and I expect each or one of them to be used for continuations. And then what happened? I will mark the entire week, because when you are refining a key level, for example, now, if you want to refine an entry inside here, for example, you have to box it and then go to the lower time frame, because the refinement can come even as high as, let's say, as high as what? This place. Sorry, as high as here. It is inside what? The zone. So you have to box it and know where your refinement is going to be within. So we boxed it like this and we went into the lower time frame. You can go into the 1 hour, 30 minutes, or even the 15 minutes, depending on how you understand price action. So I dropped into the 15 minutes. I will just be fast. And then on the 15 minutes, this is my extent of refinement. Sorry, this is my extent of refinement right here, right? This is the one above, so I'm not interested. This one. So what did I do? Just take a look at it. Now, the structure I explained, can you see it right here? Right, all right. Where can you see it? We have a sweep of liquidity right here. We have a break of structure right here. We have a structural liquidity where right here. And we have our entry coming from that QM. Now, what is this? This is our entry, and this is where the sell started from. What is this? Structure type what? Type 1. How does structure type 1 look like? I drew it at the beginning. We want to see the market taking out liquidity, breaking structure, creating a structural liquidity, and then what? Coming back to sell. And this is exactly what happened. But what am I doing? I'm taking continuations. And my belief is that, okay, since I'm in a daily bearish storyline, all what? H4 key levels are supposed to be used for sales, then I'm going to be interested in what? Refining all H4 key levels until I find a suitable structure. Okay, now, what if the market now ignored, what if the market did not give a structure here? I would have been interested in one above until I find the one that makes sense. All right, now, there was still an entry here, but this one now presented with a structure type what? A structure type 3. This is an RBS overlapping inside an imbalance with what? Liquidity right above it. And this one, structure type 3 that presented itself. This is one of the trades I took what? This particular week. And then another one I took this particular week again. Pay attention to what I'm doing. You know, there are different ways I get my direction, right? I use different methodologies to get my direction. Now, the origin of this particular pullback right here, we knew of it, especially those that trade the way I do. So we have a shadow rejection right here. After the shadow rejection, we went into the H4 time frame. And once we were in the H4 time frame, I'll delete this one for the other entry. Well, let me just let it be. We have a shadow rejection. And after the shadow rejection, we have what? A breakout right here. Now, after the H4 breakout, we knew we were bullish, right? So we were expecting all H4 bullish key levels to be used for buys. The market created this OCL and even this OCL. Then what? You mark out those OCLs and you go into the lower time frame. So we have 1 and we have what? 2. So now, if you go into the lower time frame, for example, me, I go to the 15, if you have traded my model 4, and then on the 15, I refine it into what? This particular zone, right? This was the zone right here. This is the zone that you refine it into. Now, you have to make sure that your particular entry makes sense, meaning it fulfills all the criteria of entry, that is one, and it also fulfills all the criteria of what? Of structure. So that is why it is called SLK, right? Now, what happened right here? This is an engulfing buy candle, making this a sweep, a break, and this is a fair value gap, making this what? A structural liquidity, something I've explained before. And this is now the buy. This was the one I used. This were 2 trades which we were taking what this week by me, using them for example as what? Continuations, right? So there is a lot to what I do, which everybody knows, but this is what one of the ways I can consistently take continuation. But what I'm telling you is okay, the market can decide to pull back, and take out the entire H4 and come to a different H4. That one will come in more different what explanation. But you also pay attention that yesterday the only trade I took was a buy, and I took a 1:5 and I closed out, which was what right here. I took a trade right here. But this is also what a structure. How a sweep of liquidity happened here, a breakout structure, and what a structural liquidity which was right here. Market drop gave us the move, but then we were bearish. Yes, that's what the market still gave us the move, and I used it to pass my phase 2 Forge of Traders account to get funded 100K again, right? Still got funded again, booking my funding to about $850K in funding. I just have $150K to reach my target for the year. So this is another trade I still took, which was what? This buy right here. Now, based on another different explanation, that is why this buy was taken. Now, look at this key level right here. Go to the H4 and see. It was a H4 key level refinement. Can you see? How did I know that the market is going to ignore all these ones? That's going to be another topic for another different day. But for now, how I take continuations, I've given you guys a brief explanation for you to use and put inside your head. So there is more to everything we're doing. And also, when the storyline changed, I used two different routes. Let me bust your head. In this one, the storyline was bullish. It gave me the opportunity to take this buy. But in Oanda, the storyline was bearish. Why? Because this is the most recent break to the downside. So the storyline was bearish, and that is why it came up. Now look, this is the breakout on the H4 time frame, right? H4 breakout after the rejection. After the H4 breakout, market ignored this OCL, but then used the OCL above. So there are scenarios that market ignore this and go to the one above. That one too, we'll talk about it. Okay, like I said, not all key levels, but most H4 key levels are supposed to be used for what? Sells or buys, depending on the direction. If you're using the weekly, then pay attention to what? Daily key levels. And their refinement should make sense, right? Once their refinement makes sense, bro, trading is very simple. I'm sorry, but that's the truth. It is very, 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 very simple. Do you get? Very simple. Market came bam, and that's why the sale started right there. So that is why I use two gold. One is going to give you a bullish environment, the other one can give you bearish environment. But anytime they tally together like this, don't they trade they go. Don't they trade they go like that. Okay? Don't they trade they go. Do you get? So guys, I'm going to stop here. I'm not going to do too much noise because I have a lot of models that I use to take trades. Because yesterday right there, I have a very simple model that I used there. So I'm going to give you guys time for question, but the recording, I'm going to stop it right here. So I'll give time for question.